Right, today we're joined by Dan Standing, National Relationship Manager at Shawbrook Bank. Dan, tell us a bit about yourself and your time at Shawbrook.
Okay, so I've been at Shawbrook for 12 years now, pretty much since it started up as Shawbrook. Started off in the underwriting world and then progressed up to National Relationship Manager where I am today.
You've been there a considerable amount of time. Have you seen things change over this period of time?
Things have changed massively in my 12 years there. Obviously, we've grown as a bank, the market's grown, our panel's grown, and we've really developed some really strong relationships with customers along the way.
And what would you describe the main type of business that you're now looking for?
Okay, I think that, so our bread and butter is the buy-to-let. That's where we sort of have started and developed. Nowadays we're looking at bridging as well, so where you can buy the property, do it up, and then term it out with us to recycle the funds. And we look at a lot of commercial now as well. Commercial is still quite a strong market in the current climate.
One of the things I've used regularly as part of CPC is the short-term to term product. Mm-hmm. Maybe it's better they hear it from you than me so that they know the qualities of the product.
Yeah, 100%. So we sort of do two bridging offerings. One is sort of a soft touch, light refurb. So I always call it like homes under the hammer. You buy it, new bathroom, new kitchen, and then obviously, in theory, term it out with us. That's what we like to do. Or the heavy refurb where customer will take a commercial, semi-commercial, resi, turn it into HMO and sort of grow it from there.
With it, one of the things that goes on, obviously, with the short-term to term and most of your other stuff is bringing in line with the regulation. There's been a lot of changes. Mm-hmm. What sort of stuff would you recommend a client does or prepares for in advance of putting an application in with you or any other bank? Because it's much the same across the board.
Yeah, I think it's key, first and foremost, to have a really strong broker behind you. They know the bank's requirements. They'll know what's going on in the legislation and the market. But to me, any customer, if they're looking to purchase a property, it's understanding what area it's in, what can and can't be done within that council's remit. And really getting behind the property before they go off and start to, want a better term, knock it around and sort of fall out.
I think one of the main points that all lenders are now looking into is the source of funds, sort of trail of the breakdown of the full monies, deposit, where it's coming from, gifts, etc. And a lot more focus is now put on that side of it, joint ventures, etc. What's your thoughts on that?
Yeah, I think from any bank's point of view, there's always been a compliance in place to understand where funds have come from. It's not a bank accusing anybody of anything, it's just being comfortable that there's the money, how have you accumulated that, where's it come from? And it's just getting behind that. Most customers will better provide bank statements, evidence of sold.
It's not a matter of just saying where it's from now.
No, yeah, you can't just say, yeah, I've got it from here. But a lot of it will be bank statements. You sold a property, there's a completion statement to show it went through, and things like that. It's just getting behind it.
I think they're particular on sort of any lump sum payments, sort of 5, 10, 15,000 pounds. Where did that come from? It's come from another account, statements for that account, all the way back to the actual source of it all. Yeah,
I think it's really important that for lump sums like that, the customers understand they're going to be asked questions. Yep. It's just a regulatory requirement, basically, we have to go through. We can't just take someone's word for it. So if you know in advance what we're going to be asking for, that can all be boxed off before it comes into the team, the underwriter, and therefore the underwriter is smoother and quicker.
Excellent. One of the other big areas where you do, I know you do a lot of your business, is the HMO, the commercial yields. Tell us a bit more about that sort of product.
Yeah, so we've done a lot of work over the years since I've been here with HMOs. There's sort of 4 views, if you like, for how we value it. The easy ones to look at is if it's got sui generis planning for the large HMOs, or it's in Article 4. On that basis, we'll be looking at yield-based valuations. The ones that sort of fall under bricks and mortar are the customers that will buy a property, give it a lick of paint, split the lounge off, if you like, into 2 more bedrooms, and think suddenly they've got a property worth double the value that they had
but
before.
Haven't changed the planning.
No. You can buy next door for exactly the same.
The one area that's affected the HMOs since the rate increases has obviously been the stress levels, and more importantly, which was never a problem before, because of the coverage is the net rent, and that can be quite a difference in figure. How do you deal with that on your application now?
Yeah, so look, from our point of view, we've just lowered our stress cover. So we listened to what was being said within the market, and we understand that rates have gone up, so therefore you're sort of double counting certain aspects. So we look at adjusted gross rent when we look at rental cover. We've been very specific to the values to say, right, this is what we want to deduct.
Yeah.
So as long as the customer can understand, or the broker behind it understands what's being deducted, you can assess that up front.
Because one of the things which I always get when you talk about the deductions, well, why the deduction management? We do it ourselves. But you can explain why.
Yeah, look, I think some customers do the management themselves, and I fully appreciate that. We also have to look at the bigger picture at times, that if you aren't managing it, someone else takes the property over, what impact that could have. So we do have to look at covering that stuff.
But there can be such a big difference between different valuers' views on that percentage. And there is also therefore an option to try and improve the figures to increase the net value.
Yeah, so look, we do appreciate that different valuers, like anybody in life, will have a different view to potentially the next one. So we are trying to get that more sort of streamlined and a bit more sort of cohesive with each other, so different valuers don't look at it different ways. We're doing a lot of work with appraisers and BES to make sure we get comfortable with that.
Right, and moving forward then, what new stuff have you got for us?
So we're going to make some changes to the commercial offering. We see that we sort of tightened it, for want of a better term, with last year happening with the rate increases and what have you, and being unsure of what might happen. The actual commercial sector is performing very well still, so we're looking to make some changes to that in terms of our minimum loan, looking to LTV increases to bring that up, and basically been going back to offering more on the commercial and be a bit more relaxed. And
the way the market seems to be going at the moment, I'm not holding you to this. The long-term money type rates are starting to come down. Any plans with the bank?
Look, I think the bank is always looking at where we are with rates, swap rates. Obviously, we have a savings arm as well that we have to make sure we look after, for want of a better term. So, yes, we are constantly looking at where we are with rates and where the market is, and making sure we're placed where we need to be to drive the business and provide the offers.
Excellent. Right, that concludes today, and thanks for watching us, and look out for the new podcast that will be released on all the mainstream media outlets. Thank you.
Thanks.